Good afternoon, everyone. Jason here. Today is July 21st, and this is your aftermarket update. All right, so if you were in the trading room with us this week, you know that we had a battle on our hands for most of the week. We were up a couple of days, down a couple of days, and we were just really trying and fighting hard to get our footing. If you were with us yesterday, we had a small losing day yesterday. That really could very easily have been a winning day yesterday. In fact, when I got short at 42. I think it was 47, 42, and we were looking to take it down to 46 in the 46.80 area. When I got short, the market comes down, pops back up, and takes me out by a single tick. We re-enter. Market comes back up, takes me out by 3 ticks, and never looks back from that point. So on 2 trades, trying to get into the same position, trying to get down to the same target yesterday, I end up getting taken out at 1 tick, the high, and that was 20 ticks on 2 lots on that trade. And then the next trade, I get taken out at break even before it goes all the way down to what the low was right at the 1:30 p.m. close. At 84. So if you 42 down to 84 would have been a 58 tick trade on 2 lots and would have been a very handsome trade. But as it was, I didn't catch nearly all of that and ended up having a small losing day yesterday, a losing day on Wednesday, but then I had 2 winning days on Monday, Tuesday. All of that being said, there was a lot of discussion about why do you hang on for those winners? These trades went positive this much, and you know, there's a whole philosophy and mindset behind why we do what we do. And today was a really good example of that. I took 1 trade today, and we took that trade for 110 ticks. You can see the price ladder here in the middle of the screen. You can see we had one $1,100 trade today. And so when you look at the way that the week was, it was a real battle all week, and sometimes trading is like that, especially during contract rollover. This week was contract rollover, and during the CL rollover, you can expect choppy to bouncy trading conditions, and that's exactly what we did. However, today was the first full day of the September contract. The August contract was over. We did trade the first full contract day today, and voila, the market is doing as expected. And on a 2-lot trade, we picked up a $1,100 trade today. So that is the trade of the day. Let me tell you what got us into the trade here. First of all, we have our market maker levels. If you come back here and look, one of the things that we look for is kick the signal, pay the target. So if you look right here, the market comes right down into your daily structure signal, right? Comes right down into your daily structure signal. And the way that we look at this is it has to make it up to the next level, or you begin to look for the level down below. So as the daily structure signal gets kicked right here at 43, we could not quite make it to the daily structure mid up here at 78. In fact, we got here all the way up to 64. The daily structure target was 47.48. So when this thing kicks the signal here, can't make it up to the next level and ultimately to the daily structure target, we call this kicking the signal and paying the target underneath, right? So this signal paid the target all the way down here to 46.08. Now, that's not where we got in, though. We didn't get in at the daily structure signal. We actually got in really close to the high of this move right after the open today. You hit this 74 level. We had the daily structure mid, and then I'm going to bring this chart over in front of you here. This is a 3-minute volume profile chart. Really don't need to necessarily look at the volume profile aspect of this, but right here is where we were looking to get short today. The market rallies up here to this 74. And what you're looking at here, this is the day's VWAP, volume weighted average price. This is the monthly VWAP. So this is the VWAP for the month. Market comes in here. The VWAP at this point was at 66. Market rallies up to 74. Did not make it to our market maker level daily structure signal. That was one reason, and this is the secondary reason to get in. We get in short right here at 65, just off of this monthly VWAP, and then of course the rest is history. Now we were looking to target all the way down to 95. So what you're going to hear me talk about in the trade is there was a big pool of liquidity around 46.30. And so we were going to originally look at a target down there at 46.30. So remember, one of the things that we just talked about is the market had been really very choppy, no follow through. We try to hold on to these big targets. It was contract rollover week. So we just spent a week battling the market back and forth where one day we would hit the target. The next day we'd get a little closer to the target. Then I got stopped out trying to get to targets. And it was just this real kind of choppy back and forth week. So my initial thought process was if we get down to that liquidity at 30, then we would be really interested in looking at a potential deeper move. But the first thing we wanted to do is make sure we could get down to 30. But we said if we get down to 30, then we would be really looking to be aggressive on the target. And so let me show you this really quickly. I'm going to draw a horizontal line. I'll tell you why I picked 30. Here's 46.30 right here. Okay. So if you take this 30 right there, bang. So this blue line is 30, right? So clearly this has been a very much an area of interest, right? So this is Friday, Thursday, Wednesday, Tuesday, lots of rotation Tuesday, Wednesday around the 30 area. Come back over here into the last week. You had this big run up, barely closed a bar or two over. This is a 15-minute chart. You failed out of that. We tested it again and failed. So this was a key area at 46.30. That was pretty much a key area for us here today. And what we had talked about when we got into this trade and we were looking at the target, we said that there was a lot of liquidity stacked up around that 30. So that was an area that we knew was going to be important today. We said, however, depending on the speed with which we broke down through that, then we would move that target down to 95. Now, if you measure recent swing points, you'll find that our sweet spot there is at was at 95 down there below today. There was a sweet spot of one of our measurements down there at 95, and that's what we were going to be looking at for the target. Now, we said if the market begins to accelerate down through it. Now, this is a 3-minute bar here, and if 30 is right here, all right, we said if the market begins to accelerate, and look at the length and the strength of that 1 3-minute bar. So obviously it was, we'd moved our target down to 95. We get down to 01, and we trail stop back up and over at 10. So we get in at 65. We take the trade on 2 lots to 10. That's 55 lots times 2 contracts for an $1,100 OTG trade of the day. So that's the rationale behind it. And again, one of the things that we constantly talk about in here, we talk about it all the time, we talk about it every day. We like to hold on to our winning trades. We like to cut the losers short, let the winners run, and that's exactly what we showed you in here today. And so all of this angst that we were dealing with this week, a little bit up, a little bit down, up, down, all of this kind of process that we went through paid off today in holding for our bigger picture target. So I'm going to let you watch this OTG trade of the day. As always, the trade was a little bit longer in length, although today it wasn't nearly as long as some of these are. I'm going to cut it down, let you see the front, let you see where we get in. I'll cut it down, put some music behind it, and let you see us hit the target, and then we'll come back and talk about it on the other side. So without further ado, here is that OTG trade of the day. There's 64. I'm in at 65. The stop is 78. And your target right now is 30. The target is 30. All right, so you can see that we got trail stopped out there at 46.10. Ended up being a little over 4-to-1 risk reward. 13 tick initial stop times 2 lots is 26 ticks. 55 tick target times 2 lots, 110 tick target ends up being 4-to-1. So the market bounced here off of this low at 01. Eventually, we did come down into that 95, where we thought the target, in fact, at the end of the day, even lower than that at 45.53. So from our entry to where the low of the day and low of the session was, ended up being well over 100 ticks. So we caught the high of the RTH session today and really took a really good chunk off the table. So again, going back to what we talked about at the beginning of the video today, we had a choppy week this week. A couple of wins, a couple of losses, but the philosophy of holding on to your winning trades, let those winners run, cut those losers short, let those winners run, proved itself to be an effective strategy one more time here again today. So again, as always, I want to say thank you for watching the videos here at the Oil Trading Group. And until next time, I want to wish you good luck and good trading.